Most people think hitting an 800 plus credit score is about doing more payments, more accounts, more tricks. But what if the real reason you're stuck below 750 has nothing to do with what you're doing and everything to do with one thing you keep repeating without realizing it? Imagine paying your bills on time every single month, thinking you're doing everything right and still watching your score barely move. That's exactly where millions of Americans are right now. And the truth is, one silent habit is holding them back from entering that elite 800 plus club. Once you see it, you won't be able to unsee it. Here's the reality. Your credit score, especially your FICO score, isn't just a measure of whether you pay on time. It's a behavior tracker. It watches how you use credit, not just how you repay it. And the biggest mistake people make is carrying balances on their credit cards even if they pay them off eventually. You might think keeping a small balance shows activity or helps your score, but that's one of the most damaging myths in personal finance. The moment your balance reports high relative to your limit, your utilization spikes and your score drops, sometimes by dozens of points. Even if you pay it off later, the damage is already recorded because credit bureaus capture a snapshot of your balance at a specific time, not your intentions. Think about it like this. If your credit limit is $5,000 and your balance shows $2,500 when it's reported, you're using 50% of your available credit. To the FICO model, that signals risk, even if you're financially stable. The people with 800 plus scores treat their credit cards differently. They don't just pay on time, they control what gets reported. They keep their utilization below 10% and often even under 5%. That means if you have that same $5,000 limit, your reported balance should ideally stay under $250. This single shift can dramatically change how lenders view you. Another hidden issue is timing. Most people pay their credit cards once a month, usually on the due date. But here's what they don't realize. Your due date and your statement closing date are not the same thing. Your balance is typically reported right after the statement closes, not when you make the payment. So if you wait until the due date, your high balance might already be reported, dragging your score down even though you paid in full. High scores often make multiple payments per month, strategically lowering their balance before the statement closes, so the reported number stays low. Then there's the habit of closing old credit cards. It feels responsible, right? You pay off a card and think, I don't need this anymore, so you close it. But this can backfire in two ways. First, it reduces your total available credit, which instantly increases your utilization ratio. Second, it can shorten your credit history, which is another key factor in your FICO score. The longer your average account age, the better. People with 800 plus scores understand this, so they keep old accounts open even if they barely use them just to maintain a strong credit profile. You also have to look at how often you're applying for new credit. Every time you apply for a new card or loan, a hard inquiry shows up on your report. One or two inquiries might not hurt much, but frequent applications signal risk. It tells lenders you might be desperate for credit, and that can pull your score down. High scores are intentional. They don't chase every new credit offer or sign-up bonus. They space out applications and only apply when it truly makes sense. Another overlooked factor is credit mix. If your entire credit history is just one or two credit cards, your profile might look thin. The FICO model rewards a mix of credit types, like installment loans and revolving credit. This doesn't mean you should take on unnecessary debt, but it does mean that a well-rounded profile can give your score a boost. People in the 800 plus range often have a balanced history that shows they can handle different types of credit responsibly. And then there's consistency, which is where most people fall off. Building an elite credit score isn't about one good month. It's about years of disciplined behavior. One missed payment can drop your score significantly and stay on your report for up to 7 years. That's why automation is key. Setting up autopay for at least the minimum payment ensures you never miss a due date, even if life gets busy. From there, you can make additional payments to optimize your utilization. What makes this even more powerful is how these small changes compound over time. Lower utilization, longer credit history, fewer inquiries, and consistent payments all stack together. It's not about gaming the system, it's about understanding how the system actually works. And once you align your behavior with how the FICO model evaluates risk, your score starts to move in a completely different direction. So if you've been stuck in the 700s or even the high 600s, it's not because you're doing everything wrong, it's because you're doing one or two things slightly off repeatedly. Carrying balances, paying at the wrong time, closing old accounts, these feel harmless, but they quietly block your path to 800 plus. The moment you stop doing this one key thing, letting high balances get reported, you remove the biggest barrier standing in your way. At the end of the day, an 800 plus credit score isn't reserved for the wealthy or financially gifted. It's built by people who understand the rules and play the game with precision. Once you shift from just paying your bills to strategically managing how your credit looks on paper, everything changes. Your approvals get easier, your interest rates drop, and your financial opportunities expand. And it all starts with stopping that one habit today before it costs you another point tomorrow.